we would like to welcome you to one of our trading case studies, this time in MGM Mirage. Firstly, we are going to show confirmation of an existing long position, 80,000 shares at the price of $12.53, which is precisely our proprietary breakout pivot. As you may see, there is a long position in MGM, entry $12.53, for 80,000 shares, currently at a profit near $176,000. Our target for April 8, 2010, was $15.1, mentioned in our chat rooms. We missed it by 5 cents since the high of day was $15.05. Nonetheless, an impressive accuracy, near 100%. Share price closed at $14.73. Secondly, let's take a look at Beyond Trading MGM Mirage technical chart. Blue line represents support level. Blue arrow, recommended entry point. MGM Mirage was recommended in 2009 at $8 as a long-term position. This recommendation was given in our private blog service, Platinum and Elite. In 2009, within a couple of weeks, subscribers were able to make a return near 100%. At that point, we urged investors to take profits, since MGM Mirage was seen a long-term pick, rather than a mere momentum player. On the following months, it came back to the $9.5 level, where it was recommended, for the second time. Frankly, we have never had a specific time for a potential breakout. Our trading is based on facts rather than beliefs. Recent stock market strength suggested this test could be very near, therefore to show you all how confident we were on a breakout, a trade confirmation has been shown for 80,000 shares at $12.53, a price much higher than $9.5. Volume is one of the most important technical indicators in trading. Basically, if volume is not present, there is not hope. That has been the case in MGM Mirage, as you can see from the chart. Please take a look at those two blue ellipses. That gives you a clear indication of momentum and buying interest. An additional aspect to consider is the fact most Wall Street analysts have been bearish. The percentage of short interest is very high. Furthermore, stock retail newsletters and TV stock gurus mentioned MGM as an excellent short sell opportunity. That could indeed be the case, if professionals agreed, however one has to look at facts. We do not opine, pumping or dumping stocks just because. Let us elaborate on the subject using facts. Blue line, which identifies support, has been successfully tested several times during several months. The selling volume was never sufficient to break the midterm support line to the downside. Market was basically telling us, this one wants to go up. Do not fight it. It is important to mention at this point, Beyond Trading approach to trading is to avoid chasing momentum on a stock. Similarly to Apple case study, it was recommended to buy the stock near support levels, to minimize potential losses and maximize potential profits. A long-term stop at $7.9, right below our initial entry recommendation at $8, was never triggered. Thirdly, we shall say that Beyond Trading recommended taking some profits on this stock at $14.96 on April 8, recommending moving up trailing stops on remaining existing long positions. Beyond Trading methodology comprises important trading rules. Stop and trailing stops is just one component. Investors often neglect other important component: profit-taking rules. To be successful in trading for consistent profits, one has to follow very strict rules. You cannot risk more than a percentage of your total accumulated profits. Having said this, looking at the past, using an example, a client that bought MGM near $8 in September 2009, selling it near $14, to buy back the stock near $9.5, following our recommendations, could not risk more than 3 points on his new position, which is precisely 50% of his historical profit. The objective is to limit important potential losses, basically using accumulated profits, going long at important pivots, defined by Beyond Trading proprietary methodology, rather than adopting a gambling approach, which we strongly condemn. Please bear in mind that once you assume a position in the market, you always have to plan for the worst-case scenarios. By taking some profits off the table, Today at $14.96, we have adopted that attitude. We do not gamble. Our trading approach seeks a permanent daily confirmation of our support and resistance pivots. We do not make projections without confirmations. As an example, if we are selling short a stock, and our support pivots hold quite well, we recommend to close short positions, reversing to the long side, and vice versa. The objective is always to interpret market information as neutral. What today might be seen as an attractive long, tomorrow might be a good sell short opportunity, depending upon how a given position trades around one of our pivots. Resuming, assume entire responsibility for your own decisions. Do not trade attached to certain beliefs when market is telling you the opposite. Use stops, trailing stops, and profit-taking rules. Our single most important rule is described in one single sentence. Do not let profitable positions turn into losses. Advanced subjects such as position sizing, emotional trading and rules to reverse positions is discussed in our learning sessions, orientated towards fund managers, professionals and corporations. We sincerely hope that we contributed positively to your trading. We would be glad to have your feedback. Our personal purpose is to help the small investor like you. We believe that by sharing experiences and opinions, one may realize he can outperform major institutional players instead of following them. History has proven us right. Do it, or do not do it. Do not try. I invite you to watch one of our previous videos trading the iPad from Apple. It was a success case study from a global leader, beyond trading. Happy trading!